The FOMC begins its two-day meeting today, so that means tomorrow we get the decision. Of course, no change is expected. We convened our mock Fed panel, and there were 6 votes for that. Don Peebles remains the lone dissenter, saying the economy needs a half-point cut. Claudia Sahm says not enough progress is being made in the fight against inflation to cut at this point. Representing the panel is Paul McCulley. He's the former PIMCO chief economist. You get to be the Fed chair today, Paul. Welcome.
Only on TV.
You just play one on TV. So what kind of tone do you think he'll strike in the presser? Because that's where the market's guessing game is really going here.
I think he's going to strike the same tone that he did Friday a week ago, which was on the eve of the blackout period, when he said the economy remains in a good place, still in a good place. But he also said we have, as everyone knows, very elevated uncertainty. So his conclusion was, we're in not a hurry. There is no hurry for us to do anything, and that he wants to, as the incoming data comes in, both on the macro side as well as on the policy side, to try to separate the noise and the signal, and that they will react in the fullness of time, but time is not yet full. So I think tomorrow he will basically reiterate what he said 10 days ago, eloquently, but also not try to provide a whole lot of new information, because he really can't at this juncture, because this uncertainty is not just a cliche, it's real.
Paul, let me ask you this. Our Steve Leisman was on Squawk Box this morning, and he was talking about the idea that the Fed just kind of has to tread water, as you're saying, because they have to wait to see what the impact economically is of the tariffs, which is so difficult to game out in advance. And so they have to wait and see what the impact is and then react to that impact. So you're looking, past April 2nd, maybe weeks, months to analyze what the impact is. As we wait for that to happen, what does the Fed look at? How do they tease out what that impact is as that process is playing out, as they make their decision?
I think they're looking at the same thing that we are in the marketplace. And right now, I would zone in on the divergence between the sentiment data, which is also called soft data, and the hard data. The sentiment data has turned very negative, but the hard data is still in a good place. So essentially, I think what they're looking at for signal is the soft data going to get into the hard data. Put differently, are people's foul sentiment going to lead to negative action in the real economy, or will they just remain in a foul mood but keep on getting on? So I think that's what he's going to really be focused on.